Hi, and welcome to our 5-minute tax update for May 2019. The aim of our tax update is to brief you on the most important tax developments. So let's start today's webcast by looking at the most recent developments in local legislation. A tax bill was recently submitted to Parliament proposing the amendment of the law for the settlement of overdue taxes. As a reminder, one of the requirements in order to qualify for the application to the scheme was for the taxpayer to be up to date with the submission of all tax returns up to 31 December 2018. The bill proposes to extend the submission deadline for all tax returns to be submitted by 30th of June 2019 in order to facilitate the taxpayers who did not have the opportunity to apply for the scheme within 2018. Apparently, there is increased interest for this by small and medium-sized enterprises and individuals who require more time to arrange the relevant finance for paying their debts. In light of the revised tax framework for investment funds, the application to obtain a tax identification code, Form TD2001, has been amended accordingly. You will recall that one of the tax law amendments published back in July 2018 provided that each compartment of an alternative investment fund, AIF, or of an undertaking for collective investments in transferable securities, UCITS, can be treated as a separate taxpayer. In this respect, the AIF or UCITS compartment applying for a separate TIC should complete on the form the relevant TIC of the AIF or UCITS to which it belongs under the relevant new section. Lastly, on the local developments, we cannot have a tax update without mentioning our most popular topic of the last few months, which is, of course, that of the ESE. It appears that proposals have recently been submitted to the Ministry of Finance by the Employees Trade Union, SEC, requesting compensatory measures against the newly introduced contributions to the ESE. More specifically, SEC is proposing to increase the allowable tax deduction granted to individuals for contributions to the social insurance funds, the life insurance and medical contributions from the current 1/6 of taxable income to 1/5. Such a proposal is also supported by the Institute of Certified Public Accountants of Cyprus and the Cyprus Chamber of Commerce and Industry, who also submitted a number of other tax proposals. The aim of this is to reduce the impact of the ESE contributions not only on the individuals but also on the employers who are facing increased costs as a result of the newly introduced contributions to the ESE. The most important proposal being that of the abolition of the Social Cohesion Fund contribution by employers. Moving on to international developments, on the 15th of May, the Council of the European Union adjusted the list of non-cooperative jurisdictions for tax purposes in light of commitments made by a number of the listed jurisdictions. It seems that since the list was first published in 2017, Barbados, Bermuda, and Aruba made sufficient commitments at a high political level to respond to EU concerns. As such, the Council decided that Barbados and Bermuda will be removed from Annex 1, which is the black list, to Annex 2, to the grey list, while Aruba will be removed entirely from both lists. Consequently, the following 12 jurisdictions remain on the list of the non-cooperative jurisdictions. We will now have a quick look at some tax treaty developments. On the 15th of May, Cyprus signed a tax treaty with Kazakhstan, which was published in the Government Gazette on the 24th of May. The applicable withholding tax rates are as follows. A 5% withholding tax will apply on dividends if the beneficial owner is a company which holds directly at least 10% of the capital of the dividend-paying company. Otherwise, a withholding tax of 15% will apply. A 10% withholding tax on interest and royalties will apply if the recipient is the beneficial owner of the income. The treaty will enter into force once the relevant procedure required by the laws of each country have been completed. We will close off today's tax update with a brief reminder of the deadlines coming up. As there is no tax deadline for the 31st of May, we will look at the deadlines for the 30th of June. The 30th of June is the deadline for the payment of the tax balance for the tax year 2018 through self-assessment by individuals who do not prepare audited financial statements. It is also the deadline for the payment of SDC on rents, dividends, and interest from sources outside of the Republic for the first 6 months of 2019. This concludes our tax update for this month. Thank you for watching.